Very good evening to all of you. Very interesting day today. I'm going to show you some very important set of data that can define how the markets can turn over the next 1 year. This is an extremely important set of data which we are seeing, which we have been observing internally for some time now, but we are seeing a big shift in this data. Now, primarily, as you know, Markets Mojo looks at researching all listed companies. So we are one and the only research house which would typically have the reservoir of having fundamental analysis on not just 150, 200 top stocks, but across the market. When you look at so much of data and when you look at what this data can do, primarily it can sometimes give you a very, very clear trend. Sometimes the trend can be confusing, and sometimes the trend is not there. Over the last 1 year, what we have seen is that the trend that we saw within the data was a lot confusing. What I'm seeing now is that the trend is emerging very, very clearly. And today I want to discuss that trend with you in the first ever webinar that we're doing today on looking at what the market and how the market can shape over the next 1 year, looking at how the trend within this whole big data in Markets Mojo is changing and giving us some bit of clarity now as we are emerging today from this day-to-day market up and down movement that we are seeing. So please stay tuned right till the end. Every slide that I'm going to present today is going to carry very, very important data. I would try and make pause on each of these data points so that if you want to look at it, if you want to take a screenshot, a picture of it, you can go ahead and take it. But we have a lot of things to present today, a lot of interesting things to shake some of the perceptions that we have in the market today to make sure that we have a little bit of more clarity in terms of what's happening. With that note, let's start. I would start with a disclaimer. This is an investment advisory notice. We emphasize that all investors should use the information on this webinar merely as a resource to enhance their own research and understanding. This is obviously not an investment advice. Nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with certified experts before taking any investment decision. Market risk warning: investment in securities is subject to market risk. Past performance should not be construed as guarantee for future returns. And obviously high risk investment in equity and equity related securities involve a high degree of risk, and users should not invest unless they can afford to take the risk on their investment. Before we start on the proceedings, I must tell you that during COVID 2020-21, we had done something for our investors which was extremely exceptional, and they really, really appreciated. Today, when I meet investors and they say that they are 2,045 subscribers or 2,050 subscribers, happened because of a very, very special thing that we had done for investors during COVID time. I'm extremely happy to bring that back to you during these times where the confidence may be shaking a little bit, but do not forget that long-term investing can only be committed with long-term commitment to make sure that you're focused towards your goals, not just in a short term or medium term, but on a long term basis. With that note, only for very few days, we are launching the Christmas offer. This is a very, very exciting offer. This is, as I said, the offer that we did 5 years back. For 14,999, you get 3 years. For 14,999, you get 3 years of Markets Mojo. The important point to note out here is stock of the week is also a part of this package. So stock of the week plus Mojo 1, both of these are available for 14,999, and the period is 3 years. This offer is only applicable on the link that is there in this webinar. It is not available on the website. On the website, we have a Christmas offer, but that is not this offer. So if you want to subscribe to this offer, you have to take it from the link that is under this particular webinar to subscribe to this offer. But this is not enough. We've made this offer way better. On my next slide, we created a special package for people who want to look at the big market as well. So we created a special package for India plus US, which means it has India plus stock of the week, plus Mojo 1, plus the whole of US access for 3 years for 19,999 only. You get 1 year free. Your discounts are in excess of 90%. This is something that we are doing very, very specially for our webinar attendees. I know most of my webinar attendees ask us about these offers, and this is something that we did as a very, very short duration offer that we'll do for our loyal customers. So I repeat, 14,999 if you want to take only India package with stock of the week for 3 years, and 19,999 I would say is a great offer to have the whole of US as well included as global access. So India plus US for 19,999 for 3 years, where you're getting 1 year absolutely free. As I said, only use the link below this webinar. The offer on the site is not this offer. It's only for the paid Mojo 1 users who are on this webinar today. Let's look at the market. I'm very excited about this presentation today because we have a lot to cover. So we are going to deep dive into the market outlook. Now, obviously, the key question that you must be asking is that why is the markets turned volatile in the last 2 days? There is a lot of volatility. Yesterday, the markets were down in excess of 1%. Today, the markets opened 0.5% down, although they recovered a little bit. But there has been a downside trend over the last 2 days that we've seen. Is this a short duration trend? Is this something which we can expect in the market on the longer duration? Let's look at all of these questions. So predominantly there are 6 reasons, and unluckily for us, most of these reasons are happening simultaneously, right? The first is Fed policy action. The market is very eagerly, I would say very nervously waiting, which is happening tomorrow. So we will come to know about this. The market is shaky in terms of how and which way Fed policy will take the action for the next 1 year. That's one. If you look at the second one, Japan made a statement that if China was to get into a war with Taiwan, they would support Taiwan. Now with this, there is a geopolitical situation that is obviously created on an island, on an isolated island where you have the Japanese and the Chinese war force getting ready, although this is something which I don't think so is going to escalate, but there is a tension that has got created over the last couple of days in between Japan and China due to Taiwan. The third point, again geopolitical, is the fragile situation between Thailand and Cambodia. Although one of the Nobel Peace contending offer by Trump was to get a peace alliance in between Thailand and Cambodia, which was in flow. But few days back, Thailand did bombard Cambodia again, breaking that peace treaty that had been created. So that is something that again added pressure to the market. Rupee is going weak, impacting obviously sentiments. FPIs have turned net sellers. And one of the main things that has happened, which some of you may know who are tracking the markets very closely, and some of you may not know, there are almost 3 companies that we have figured out that have been in the corporate governance issue that have surfaced on these 3 companies. Most of these companies are mid to small cap companies, and hence that has added pressure that can this be the start of some more corporate governance issues on the mid and smaller set of companies. 2 of these companies are sell in Markets Mojo today. One of these companies hold. So luckily all these 3 companies, there was Rhine Technology, there was Wari Energies, which basically came in because there was a IT raid out there, although that's not substantiated. Wari is only where we have a 62 hold rating. Rhine Technologies, obviously we have a 38, and there was one more company that off the block I can't recall. But that company, these are the 3 companies where there was some, related party transaction issues. There was an IT raid and some other issues that emerged out, which created some kind of a negative sentiment on the mid and the small cap side. Although if you look at today, the small caps rebounded by around 1.26% positive versus the market being slightly flattish to negative. But we've had a rebound of the small caps towards the end of the trading cycle today. Let's not talk today. Let's talk about what we are seeing here, which is the objective of this particular webinar. So I've covered this slide in my last presentation. Some of you may have seen it, some of you may not. At the cost of repeating that, why was India's performance poor in 2025? Essentially, 4 solid reasons. One is the poor earnings growth. Obviously, corporate earnings fell short of analyst expectations over the last 1 year. That was one of the main reasons that we said what is the strength of this country, which is fundamental strength, which is the corporate earnings strength. Is that strength dwindling? Is that strength going away in any ways? The second was obviously tariff uncertainty, which you all know. What has happened from a 25 to a 50%, to what is happening in between Russia, US and India. Obviously, there is tariff uncertainty, which has driven the market down. There has been, because of these issues, uncertainty on any country, the blue money, as we call it, which is the FI money, typically moves out, which is not something which is unexpected. There was a heavy FI selling because of these factors. And obviously, there is added pressure that came in because the competing asset classes like gold and silver and Bitcoin, for that matter, started doing very well. So money moved out of the markets primarily to go into other asset classes where the rewards were much higher. The risk reward ratio was in favor against the equity asset class. Now, one of the things that you may be asking yourself that, and everybody in the markets, in the industry is asking as well, is that market, everybody is talking about all-time high, but the portfolios, give me the screen please, but the portfolio is not at an all-time high. Why is this happening that every portfolio that we're seeing, and we did analysis of mutual funds, PMS houses, obviously you have your portfolios on the site, that the market is, we're talking about all-time high, but investors are not making money. And that's very clearly the story on the wall today, that why is there anything that is happening on the management of the index that we are managing, or some people are managing the index, but that is not the case. Why is this case? And I think you know the answer. Why is this case that the index is still holding up and the portfolios are not holding up, or none of the portfolios are making money, whether it is personal portfolios, whether it is professionally managed portfolios? What is the reason that is happening? And that's a very interesting data point again. Let's look at this. Just give me a second. I think there is some data corruption here. Okay, I'm going to go like this unless... Okay. Yeah, that's better. So if you look at the 1-year returns, although Nifty on a 1-year basis is almost 5% up, but if you look at mid-cap index, that is 3.63% down, small caps are down by almost 12%. This kind of divergence and variance we rarely see in the market. It's a huge, huge variance that we've seen, which is Nifty being 5% up, but mid-caps being almost, 9% below that, which is at around minus 3.63. And if you look at the small caps, which has been a winner over the last 20 years of the equity history of this country, is almost 12% down with an index of around 5% up. This divergence in the performance, this huge divergence in the performance, unless only you are a large cap player, unless only you are in the top companies, there is no way that you would have been able to beat the market. There's no way that you would have not underperformed in these markets because of this sheer divergence across these market caps that we're seeing out there. The problem compounds further within this if you look at the advance and declines ratio. Because if you look at within these larger indices, what is happening in advance and declines, the problem worsens. If you look at Nifty, this is a 1-year basis. If you look at NIFTY, the advance ratio is 56%. But if you look at mid cap, the advance ratio is 37% and small caps is 21%. So if you are holding mid and small cap, which most of the retail investors do hold in their portfolios, which most of the mutual funds do hold, because with so much money that is coming in, you cannot just run a large cap kind of an opportunity. You do at any given point in time, do invest in mid cap and small cap, depending on what your equity strategy is. But even if you were to run a large cap fund, you're succeeding only 56% of the time, because the advance ratio is only 56%. But in mid cap, which is a no-brainer for a large cap fund to have some exposure to mid caps as well, the advance ratio is just about 37%. And if you go into small cap, you are only at around 21%. So there is a very, very severe concentration that has happened, which has got this 4.96% of NIFTY 1-year return, which is not a return which is widespread. If you see across all of this, you would find out that across the market, if you were to look at, you look at maybe 60, 70, or maybe the advance ratio is only about 30, 35%. So the concentration of the rally has been intense, which has led to a lot of underperformance in the market over a period of time. If you look at, sorry, I keep doing this because, bear with me, because I think the numbers are, okay. If you look at the mutual fund, the last 1-year returns, now these are category returns. I'm talking about the full category. I'm not talking about a specific scheme. I'm not talking about a specific mutual fund. If you look at a 1-year category return, small caps is eroded by 8.79% versus the index of around 12% negative. Multi caps have given negative returns. Flexi caps have given negative returns. Dividend yield has given negative returns. Mid caps have given negative returns. ELSS has given negative return. Focused funds have given negative returns. Large and mid caps have given negative returns. And the category return of large cap is also 2.96 versus the index of around 5%. What it shows you is that even if you are a large cap player, you've not been able to beat the index primarily because of your concentration of reward that has come on certain companies, and remaining companies have not performed that well. So it's a very, very narrow market phase that we have gone through over the last 1 year. Now, we are sticking our neck out and we are saying that we are seeing a possible light of a bull run emerging. I repeat, we are seeing a possible light, and I'm going to talk to you about how and where this light will emerge. So we personally feel that there is a bull run light that we can identify at this stage, and the factors are not emotional, the factors are not market driven. In fact, we may be one of the very, very few players who may be out there in the market trying to use this word right now, which is the bull run, where most of the market is currently divergent on their views and they are talking about a further erosion of wealth. We personally believe that the fundamentals are showing a sign. I'm going to club the data to show you what the signs the data is showing today. But I think there is a merit in saying that the allocation to equity, if that has to be increased, there is a time which is now emerging for that. And let's make a case and let's see how we are saying that. Now, if you look at the Q2 September 2025 results, we've seen a quarter-on-quarter 2.7% increase in the sales growth, but YOY that number has now become 10.2, which is a very, very good number to look at. So there is corporate results basically talks about the corporate earnings of all the companies that are listed that we can get a hands on. And we are talking about the sales picking up now after a 1 year period, although the quarter on quarter can be impacted due to tariff, but we're still looking better on a 10% on a YOY basis. What is though very interesting to see, the nimbleness of the economy in India is that we are very, very margin specific people, right? We are very, very cost sensitive people. We are not 5th generation of wealth. People are first, second generation of wealth. So they become very, very cost sensitive when the top line comes under pressure. And that is showing in the bottom line in terms of cost efficiencies. The YOY profit growth is touching around 15.4% versus the quarter on 1.5%. Now this is great news, but at the same time, it takes the risk away sometimes from the companies. Would they invest more into the future growth or not? So you have to read this data with that pinch of salt. Although the top line growth is not dependent on that, but I would typically discount the profit margin growth a little bit because primarily it creates a kind of conservativeness in the economy in terms of how much we want to spend to grow further the top line. With that, if you look at Nifty 50, if you're looking at Nifty 50 on 2-year forward earnings, you're talking about a possibility of a 36% growth till FY 2028. Now that is a projection for 2 years towards FY 2028. If you're looking at 2027 projection, we are looking at around 18.2% estimated EPS growth. And if you're looking at FY 2028, we are currently looking at around 15.17% EPS growth. So considering that you're looking at a double-digit growth figures, which I think provides a very good reason to see whether equities are coming back. And this is not a story which was going on, and this is not the story which the market knew last year. Last year, actually, the story was subdued, and this story started building up now over the last 1 quarter. Some of the things that we tend to ignore, but I think the bad news gets priced into the markets very quickly. We've got the tariffs bad news, which is priced in. We've got limited downside risk from here on into the markets. And when hopelessness comes into play, which is what is going on today, I personally believe the upside potential starts from there. When somebody starts talking about the divergence of fundamental to price, that's when the tides start turning around. And when the tides turn, these are not slow tides, they turn very, very fast. You are typically almost at that bottom. We personally believe that we are reaching there. Now, I'm nobody to tell you that we have reached there, but fundamentally speaking, and where the GDP projections of this country are coming, I'm going to cover that in the next slide. We personally believe that there is a story that is very clearly emerging for upping the possibility of allocation to equity, to having a bottom which is clearly forming as of today. A lot of people that I meet are still betting large on the larger companies, primarily because that's a safe haven. They break less, they grow at a steady pace. It's a very, very conservative way of looking at things. I personally believe, and with full disclaimers, this is my personal views. You don't have to take any action on that. But I personally believe that the data is talking something completely different from what the popular opinion in the market today is. Other asset classes, as you know, gold peaked at $4,381 in October 2025 per ounce. It was down almost 9-10%. It bounced back, but still it is down around 4.1%. Bitcoins down around 31%. It is down still at around 28.5% from its peak in December 2025. Quick update on RBI cut interest rates by 25 basis point on 5th of December 2025, bringing rates down by around 125 basis point in the full year of 2025. Further, one of the main things that has happened, India's GDP growth rate for Q2 financial year 2026 came in at 8.2%, way above the consensus of 7.3%. I repeat, it came at 8.2%, way above the consensus of 7.3%. In this slide, RBI has increased the FY 2026 GDP growth guidelines to 7.3% from the earlier 6.8%. So we've got a 50 basis point upward correction that RBI has done for FY 2026 GDP growth numbers from 6.8% to 7.3%. Market obviously remains positive. The Sensex is 5.48%, BSE 500, this is since October. Small caps have suffered again by almost 3%. Now let's look at some interesting set of data. I did cover this, but this data has changed. And I will build on this data to internal numbers that are coming in today. So if you look at Sensex today, the current PE is at 23.2. 10-year average now, 10-year average is 24.5. So we are 5% below the 10-year average. If you look at BSE mid-cap, current PE is 31.5, 10-year average is 38.2. We are 17.5% below the average now. And if you look at BSE small cap, current PE is 31.5, 10-year average is 41.1. We are almost 24% below the 10-year averages as far as the small caps are concerned. And if you look at BSE 500, we are 5% below the benchmark. What is clearly telling you is that mid and small cap have severely gone below their last 10-year averages on PE. If you look at their current PE, where they stand as on today. This data is as of today. Before I move forward, people who came in late, we did this during COVID. We are doing it for some days now. 14,999. This is a package which includes 2 years of Markets Mojo and 1 year free. So you get 14,999 for 3-year access. The difference is that you get Mojo 1 plus stock of the week. It's a combo offer that we've done for you. 14,999, you get 3-year access, Mojo 1 and stock of the week. And for people who also look at, interestingly, at the US markets, we've created a special package. Again, this is almost at a 90% discount. 19,999 for 2 years and 1 year free of India, stock of the week, and the whole of US. 3-year package for 19,999. Both these packages are not available on the website. These packages can only be bought from this particular link. You can extend multiple times. If you buy this package twice, you get a 6 years of global access with US and India together. With that, let's quickly move on. Now, before I go on to talk about the Mojo stocks, the hidden turnarounds, momentum now, and reliable performers, let me talk about a little bit of a story out here, which is showing us very clearly what is happening. Some very interesting data point that we'll cover. We looked at the current holdings of Mojo stocks, hidden turnarounds, momentum now, and reliable performers. You may want to take a picture of this particular slide. If you look at Mojo stocks has suddenly become heavy on mid caps, leading 41%, then large caps at 38%, and small caps at 22%. If you look at where is the turnaround happening, which is the second column, 64% of the turnaround that is coming is in small caps, 29% is coming in micro caps, and remaining large and mid caps are 4% each. Where is the momentum today? If you come to the momentum now column, 68% of the momentum is coming in small cap, 18% in micro cap, and large and mid cap is 9 and 5%. And our most rewarding strategy in the last 1 year has been reliable performers, higher than even Mojo stocks. If you look at reliable performers, 61% are small caps, 22% are micro caps, 16% are mid caps, and 6% are large caps. Now, this tells you that these 4 strategies, which typically are designed in a way where they have very high emphasis on quality of the company, on fundamentals of the company, apart from hidden turnaround, because hidden turnaround looks at companies that can have excellent fundamentals tomorrow. But if you look at Mojo stocks' momentum now in reliable performers, barring Mojo stocks, both momentum and reliable have gone big time into small caps, ranging from 68 to 61%. Hidden turnaround is telling you that the turnaround, fundamental turnarounds are happening in 64%. Now, I'm not saying that all these companies are getting rewarded. What I'm trying to tell you is where is the momentum coming in, because when the momentum comes in, the companies that will get rewarded will be companies who are either excellent in quality and growing very fast or turning around very fast. When I look at this particular slide, and I'm going to not look at just this slide, my last slide, today I'm going to do something that we've never done. My last slide will tell you the total split of the top 100 companies on Markets Mojo. What is the split? Who are these companies? What are these companies? And for the first time, we'll give you large, mid, small, and micro, the top 5 companies towards the last side of the presentation. So this is, in our designated strategies, we are seeing the large cap momentum. Are we seeing this across the market? I am going to cover that data as well. And that is the interesting piece of the data that we are looking at. But let's leave one point here, is that in our strategies that have worked very well for us, we are seeing a overweight of small cap that has started happening on a big way. Whether it is turnaround, whether it is fundamental growth. Both ways there is, and couple this with small caps and mid caps trading at almost 23%, 23 PE versus 23% lower PE than the last 10-year average. Mid caps at around 15% lower PE than the last 10-year average. And the fundamental performance coming out there. Now you can hold this for some time. I personally believe that you can hold this for some time. But this is going to go up. And for patient investors, there is no better time to look at mid and small caps very seriously at this point in time. There is no better time than this, where valuations are great, where the growth is coming back in the market, where the GDP of the country is looking better, where the forecasts are looking better, and where you have the momentum coming in, fundamental momentum coming in on certain market caps. So this is, if I look at these 3-4 quadrants, not one quadrant is going out of order. Now, this will not blow off unless there is some ease of pressure on the market. So the pressure in the market may keep this momentum in a little bit of, strangler position for a little bit of a time. But when that momentum comes in, the wealth that gets created in 3-4 years can get created in 3-4 months. That's what I personally believe. It's my personal belief. Again, I'm again putting the disclaimer, you don't need to take any investment advice from this, but this is, our personal belief. This also happens to be our house view, that we may be getting into that run. Now, whether large cap continues the run, that's great. But I personally believe that there is a lot of potential and data that is showing us a lot of movement which can erupt over a period of time, maybe 1 month, 3 months, 6 months. I don't know that because of the, geopolitical situation, tariffs situation. That situation is dynamic, but Rarely have you seen fundamental strong companies being held back fundamentally for a longish period of time when both the companies as well as the country is going on a good support out there. Okay. We've had two stocks that I want to talk to you about today, which have got added. One to Mojo stocks, which is Sun Pharma, which is something which is not an unknown name. Let's look at quickly the thesis of Sun Pharma. Obviously, it's a global leader in specialty generic company across innovative medicines, generics, and consumer healthcare. It's got a very innovative portfolio of high growth, innovative medicines spanning dermatology, ophthalmology, and represent around 20% of the company's sales. Vertically integrated operations, market position in India is with 8.3% market share. It ranks number one by prescriptions across 13 different physician categories, multicultural workforce from 50 plus nations across 6 continents. Let's look at the numbers. If you look at our quarter 2, which is September 2025 numbers, the revenue ended up at 14,405 crores versus the quarter preceding that as 13.786%, a YOY growth of 8.6%. If you look at EBITDA numbers, at 14.9% YOY growth on EBITDA numbers, 4,302 crores going to 4,527 crores. And if you look at the net profit, going up by a YOY growth of 2.6%, but the quarter-on-quarter growth looks extremely handsome from 2,279 crores gone up to 3,118 crores. Quarter-on-quarter net profit growth, one of the highest that this company has seen. An EBITDA margin of 31% and quarter-on-quarter net profit expansion of 36.8%, YOY revenue growth of 8.6%. So numbers are looking extremely good out here. Quickly, performance analysis, 11% growth in sales, 32.9% of sales, maintaining number one market position. You have emerging markets strong, 10.9% of the growth story at $325 million, and rest of the world impressively at 17.7%, surge to 234 million. The market outlook by MD Kirti Ganokar highlighted that India, emerging markets, and rest of the world led our growth for the period. The company launched 9 new products during this quarter while continuing to invest 5.4% of sales in R&D, focusing on the portfolio expansion and execution capabilities. So our Mojo stock latest addition as on today is Sun Pharma. Let's come to one more stock that we want to talk about before we go to that interesting piece of data again. One stock has been added last week into momentum now. This is a small cap stock. Entry date has been 2nd of December 2025. The company's name is Universal Cable. Let's look at people who've not heard of Universal Cable. Established in 1945 as a part of MP Birla Group, Universal Cable is a leading manufacturer of power cables and capacitor headquartered at Satna, Madhya Pradesh, pioneer in power cable industry with best-in-class manufacturing setup. It's a comprehensive product range. Manufacturing of a wide range of power cables includes specialty astrometric and instrumental cables, power capacitors, capacitor banks, wires, conductors, and so on. And there has been a strategic international expansion, secured landmark USD 38 million order for a 400 kilowatt EHV cable from Middle East, a first of any Indian cable company which has got in this particular niche area. The order book stood at approximately 2,945 crores as on September 2025. Let's look at the numbers. Huge growth, revenue YOY 27%, operating profit 137.3% YOY growth, going from 54 crores to 71 crores, and net profit growth of 160% from 32.9 crores to 47.7 crores. Investment rationale, growth drivers, robust domestic demand, strong export growth, better product mix, and landmark international order that just come in, which is at around USD 38 million, 400 kilowatt of EHK cables, as I said, from Middle Eastern markets. They are in the process of doing capacity expansion, new CCV lines and LV cable plants at Satna expected to be commissioned by end of FY 2026, which can support rapid manufacturing scale up and very strong order book. Now, we spoke about Sun Pharma and we spoke about Universal Cables. Now let's look at some of the data that I have been talking to you about. What we have done here is looked at the top 100 companies. It can be large cap, it can be mid cap, it can be small cap. We looked at our fundamental scores of the top 100 companies as per our scores, and we looked at what is shifting in these new companies. So, if you look at the top 100 companies today, 39 of them are small caps, 27 of them are micro caps. So that takes it to 66%. 21% are mid caps and large caps are 13%. So the data is not very different from what we have seen across the four strategies. In fact, if we go across the top 100 companies, which may or may not be a part of these four strategies, because those four strategies have their own way to filter. Large caps are at 13%, mid caps are 21%, and small and micro caps form 66%. Now, this is not very different if you recall my previous slide that we are talking about turnaround, reliable, and momentum now at small caps at around 66-68%. So the story is quite similar if you were to look at the top 100 companies. Some of the companies which are our top scoring companies on the small cap, these mostly I think are the micro caps. Rico Auto Industries, Integral Industries, Asarfi Hospital, SMT Engineering, the Mojo scores you can see out there, and you can see their 1 year return, 1 month return, 68%, 54%. But it's nothing to take home from this when you're only talking about micro caps. Let's look at the 1 month return of the top rated companies in Markets Mojo. And this is something that we've never done before. I'm doing this for the first time in the last 10 years. Top 5 large caps, top 5 mid caps, top 5 small caps, and top 5 micro caps. That's what we're going to talk about today. So if you look at the top 5 large caps, Vedanta rates number 1 at 81, HDFC Bank is 80, Bank of Baroda is 78, IOCL 78, Shriram Finance at 75. I'm talking about the top 5. Most of them are mirroring the index, some better, some below. IOCL minus 3.5, index has been at 1.36%. And if you look at Vedanta, it is up by 0.3% in 1 month period. HDFC Bank 1.4%. Bank of Baroda at 0.3%. IOCL negative. And Shriram Finance at 3.4%. Now let's look at what is happening on the top mid caps. The top 5 mid caps, Coforge at 90, Muthoot Finance at 90, National Aluminium at 88, Hero MotoCorp at 85, and Persistent Systems at 84. BSE mid-cap in the last 1 month has been down by minus 1.46. Look what is happening towards the mid-cap side. Coforge has been up by 7.7 against that negative 1.46. Muthoot Finance 15.7% up. National Aluminum up by 13.2%. Hero MotoCorp up by 13.3%. And Persistent System up by 9.2%. Every single of the top mid-cap companies in the Markets Mojo potential, in the platform that I'm talking about out here, I'm taking an example of top 5, but we've seen this across the top 100, have handsomely started inching up. And say this is not inching, there's some of these companies, this can be annual return, but 15% and 13% and 13.3% are huge returns when the mid-cap index actually has been down. Now, I know you want to look at the small and the micros. Let's go there. Let's look at the small caps first. CPCL, highest rated small cap at 84. Priscol at 81. Craftsman Auto at 81. Vintage Coffee at 80. Lumax at 78. Barring two companies, there is a big momentum that is coming. Mind you, the index, BSE small cap has been down by almost 5%. CPCL moved a lot when it came in. As you guys know, it was up by almost 30% in first week when we did the rating of this. From there, it corrected. In the last 1 month, it is down by 9%. But if you look at Priscol, in a negative 5% or a 4.62% small cap index, it's been up by 10.1%. Craftsman Auto up by 4.9%. Vintage Coffee down by 4.6%. But Lumax Auto up by 26% during the same period. Now let's look at the micro caps. Top 5 micro caps that we have. Integrated Industries, Overbell Foods, Pasupati, Shraddha Prime, Southwest. All of those 5 have beaten the benchmark. The benchmark has been taken as the BSE small cap at minus 4.62%. Integrated Industries last 1 month return is 35.9%. Overbell Foods 11.2%. Pasupati 1.3%. Shraddha Prime flattish to negative but better than the index at minus 0.5%. And Southwest at 14.3%. Now, what you're seeing out here is that if you're, and I know that some of you will say that give us this filter so that we can filter it ourselves. And I'm going to tell you the same thing that I'm not going to give you that. But I can assure you that if you want something like this to be presented every month or every second week, I can do that. But what you're seeing out here is that two things that are majorly interesting. If you were to look at the data, can I have the screen please? And if you were to look at the analysis and if you were to look at the actual performance of how things are looking like, is we personally believe small caps and mid caps may have a reason to bottom out. Fundamental strength is showing much more deeper in mid and small caps. Conservativeness which is there in the market is moving people towards large cap to create a hedge. But aggressive customers, if you're truly an aggressive client or aggressive investor, and please when I say truly, I mean truly, right? I don't mean when I do an infinity webinar and if there is 1 month performance deficit in a mid cap, people will say shift my mid cap portfolio to small cap, now shift it back to mid cap. I'm not talking that. I'm talking about when you commit. Investors who are aggressive and who are committed to their aggression. This may be one of those times that come in 2-3 years where you see compounding happens. And I want to put this on record with you guys on this date that I said this. A lot of you guys are there. There are thousands of investors out here today. That this is a house call. This may completely go wrong. You don't have to take any call basis or any investment advice basis this. I'm only talking about the data and the power of these ratings, how it is coming out, which I can see clearly here if you were to look at the top 5 companies in terms of how the performance has started shifting. I made a investment thesis on where the fundamentals are moving, where the risk is moving. I made an investment thesis on where the market caps are moving, what is happening fundamentally on those market caps, and what is happening across the market. If you were to look at, the concentration is going to be tight. You may have a scenario where the index doesn't go anywhere now. But these companies which have been beaten down will go somewhere. I repeat, you may have a situation where the index may not, it's completely opposite to what is happening. You may have a situation that the index may flout around there. But if you have a mid cap and a small cap journey that comes in, it may not reflect very well on the index, but suddenly you will say, oh, I became a great portfolio manager, or great, my portfolios are doing, my stock selection is very good. That is not because of you, that is because the advanced decline ratio will start, your advanced ratios will start looking better. You may still have index in a range bound basis, but don't always look at index as an all-time high or index is down or what will I do in the index, because the story is under the stocks that make the index and what is happening on that. So you may have a flattish index or maybe index up by 5-10%, but there would be stocks which can go up 30-40% during the same journey, or maybe more than that, depending on how fundamentally strong and beaten down they are at given point in time. This brings me up to, we will get on to the Q&A section. But before I end, for very few days, we have done something that we did in COVID times. We're giving Markets Mojo 3-year subscription for 14,999. This includes stock of the week. So this is a combo offer, never done before. 14,999 for 3 years of Markets Mojo, only available to people who are on this webinar and only accessible to this link. You're free to go to the website, you will not find this offer. This is only available for people who are on this webinar, and for people who want to spread their minds across not just India but also look at the US market. For the first time, we have done a twin country package, which is India and US. This includes India, the whole package, plus stock of the week, and the whole of US. For just 19,999, you get 3-year access again. So 19,999 for 3 years. This current package is at around almost, if I were to look at this for 3 years, it is at a 90% discount. We are only looking at very, very select few customers for this, and we will not continue this offer for long. We may increase the price of this offer. But this is something that we are first time launching on this particular webinar, only applicable. You can use the links under this if you want to extend, and you can extend multiple times. With that note, let's go on. We don't have much time, but let's take a couple of questions. Mr. Abhishek Singh, hi, Markets Mojo is doing a great job. I'm investing through the model portfolio and I've selected aggressive portfolio which has maximum small and mid cap stocks, as currently small and mid cap are still underperforming. By when we can see these small and mid caps to start performing? Thank you. Thank you, sir. Abhishek Singhji, thank you so much. We are nearing the bottom, I would say. I would say we are nearing the bottom. So I think you waited enough. Give it some time, but what underperformance or what negative things that you've seen over the last 1 year can get washed sometimes in a week or in a month. So I may not be able to pinpoint, Mr. Singh, that when will this get over, because, if I had known that, then, it would have been a different story. But I can tell you that I can smell. Sometimes you can smell, and the smell is not about gut feeling or anything. I'm looking at the data, and the data is showing me a clear reversal trend. That is all that I can tell you. As I told you that the markets can hold it back for a little bit, but not for long. And I would love to prove all my experts, friends in the market wrong, who are today talking only about large caps. But the strength of the country is growth. The strength of India is growth. The growth paradigm is what has moved this country over the last 15-20 years minus the last maybe 2 years. You cannot stop that growth. You are looking at fundamental growth of these companies. You're looking at the results. You're looking at the discount at which they are available. sentiments have a range at which you can cry for a night, next day you will smile, and third day you will laugh, right? So you can keep doing that, but this change is going to come very soon. Manish, if I subscribe for US package, then it will be effective immediately or later when this package will be active? Sir, Mr. Manish, this will be effective ASAP, immediately, as soon as you subscribe. US package, according to me, is one of the best packages that we've created. We've never created an India-US package. It's 19,999 for 3 years, with stock of the week included. So I don't know with what heart I'm giving you this particular one, maybe because of the market situation, but 19,999 for 3 years, it is at a 90% discount we're giving this particular package. It will be effective immediately. Let's take one last question. Raom, I hope I'm taking your name properly. Good evening, Moji. Will GST 2.0, IT limit, RBI Repo cut rate, etc. will play in the mind in mid and small cap? Absolutely, sir. It will. I think fundamentally things are happening very good. It's a question of time. This is sometimes you feel that you're in that particular zone where you don't understand what is happening. This is that time, because every single thing that you're seeing, and I'm not saying that this was the same time a quarter back. I never came to your quarter back and said that now looks like it's turning. I'm actually coming out and telling you this maybe after a year and a half, that it looks like it is turning, because the data is telling me. I am not somebody who gets emotional and India story and all. According to me, the data is looking very good, and all of these factors will impact. With that note, please make sure that you subscribe at the earliest, because we will be closing this offer after a certain number of investors. We will be increasing it subsequently. And you use only the link that is available on this. Do not go onto the site and try and look for this offer. It's not available for everybody. It is only for you who are our esteemed, valuable webinar Mojo 1 users. Thank you and good night.